my crusade is to help, bring that value to the inner city, because I think that once we gain the knowledge, we'll be fine. We'll have, once we become financially literate, or what. So how I do my thing, I educate first, just to give them an understanding of how it works. Knowing not having your money just stuck in a savings and checking account is not going to work for you.
Welcome to the Nicholas Brown Podcast, a podcast talk show about real estate investing, business leadership, and personal development. Each week, we explore current real-life case studies about how to build financial independence through investing in real estate to build your personal portfolio through passive income models, along with interviews from the top business leaders and personal development leaders. Now, here's your host, Nicholas Brown.
Welcome to the show, ladies and gentlemen. I have another episode. I got an episode. This here is going to talk about pretty much not investing, but personal development and a little bit of mixture of investing. But it's also going to talk about leadership, because the last two episodes I've been interviewing people, getting their perspective about leadership. Which you're going to get this person here, which he's awesome, ladies and gentlemen. He's actually a true entrepreneur. I call him that. But I'm going to read the about section, ladies and gentlemen. So when I read the about section, we'll get set. But before I read the about section, if you listen in on a podcast, whatever station it is, or whatever source, iTunes, Spotify, make sure you guys download that, where you'll see the next few episodes that we're doing these following year. The recording. If you watch this on YouTube, make sure you guys subscribe also, so you can get alerts of information such as this we're doing now. So I will begin, and then I'm gonna get straight to the source from Mr. Antonio Robinson. Mr. Antonio Robinson is one of the top life and retirement brokers in his field of expertise. His mission is to help his clients protect their legacy and create generational wealth for their families. Generational wealth is not only in the transfer of money, it's also in the transfer of knowledge. Reach out to Antonio on LinkedIn handle, which is his LinkedIn handle is, ladies and gentlemen, when you reach out to it, it's AROBINSONFFL. Okay. Welcome to the show, Antonio.
Thanks for having me.
All right. Ladies and gentlemen, this here, as I said, with some interview guests I have, he has so much experience. I see other series of other episodes I can do with this person here, but you're going to be excited. So we're going to get right to it. Mr. Antonio Robinson, you go by Antonio. Tony, what's good for you, sir?
My mother used to call me Antonio when I was in trouble, so I wasn't in trouble a lot. But when she did, it was Antonio DeLon Robinson. The full name came out, but you can just call me Tony.
Okay, all right, Tony. Tony was in the military too. Thank you for your service, sir.
Yeah, thank you as well. Thank you for your service as well.
Thank you. What branch were you?
I was Navy first.
Okay.
Right after 9/11, I did 4 years in the Navy.
Wow.
I was in the Air Force Reserve for a little bit. Then I spent 11 plus years in the Coast Guard, where I retired from. So. Okay.
Well, our audience don't know. Like I said, ladies and gentlemen, he's an entrepreneur, but he's very athletic. Also, you played for the military basketball team, correct?
Yeah, I played.
Right? Yeah, what is it called?
It's called All Armed Forces. So you play. It's pretty much the best of all the branches they play in the United States.
Okay.
And then the all-stars from that tournament pretty much go overseas and play against international militaries that have like pro players on their team, because they have to serve a year or so in the military. So we play against top-notch talent over there when we go overseas. And I won a gold medal and a bronze medal over there.
Wow.
One in Belgium and one in Croatia. So it was fun.
What's your height? What are you, about 6'8"?
Well, my basketball playing weight back in the day was I'm 6'6", 6'7".
Wow.
But I was 215, 220 back in the day. But
Okay.
When you get older, you can kind of pack on the pounds. I'm like 250, hovering around 250 ish.
That's right. That's right, man. So you probably shoot rainbows now or whatever. You ain't coming in to paint. You pouring up wood, as we say. You pouring up against the paint.
It's all in the paint for me now because I haven't played in 2 years. During the pandemic. So it's been tough.
Yeah.
So yeah.
That's okay. But this is what we're going to do on that. We want to focus on your expertise, and we want to, since you're in the military, you're well aware of leadership, correct?
Yes, sir.
So what we want to focus on, my podcast usually focus on 3 things. We talk about motivation, teaching, and perspective. So what we want to do is we want to know what motivated you to get into. You talk about life insurance, a certain type of life insurance, and retirement tied to life insurance. Am I correct?
Yes.
Okay. What got you motivated to get into that field?
So to go back to when I was in the military, I was kind of doing insurance back in 2016.
Okay.
But because I was traveling so much for the military, I couldn't focus on it. But when I got out and tried to, find work and stuff like that, I was like, do I want to continue to work for somebody or do I want to bring value in a different way? And then around the pandemic happening, it kind of opened my eyes that a lot of people need this education of financial literacy, because a lot of people don't. Because with the people passing away and stuff like that, there's a lot of families that don't have anything in place for themselves, and they using GoFundMe, all this stuff that they think is going to be there for them. But depending on your network, you may not have people to fund that GoFundMe. And I saw a big need for that. I was like, people need to know more about this because my family's covered. I have the education myself. But why I'm not going to hold it to myself. I want to share it with people, make sure they understand what this can do for their family, from generations, from their kids, their grandkids, or whatever, so forth. So I decided to go like full bore into it to bring value to families and stuff like that because it's needed. There's not enough agents out there to help bring this value to families. So
for life insurance or tied into life insurance or retirement, different types. That's what you mean, or what?
Yes. So insurance is the basic needs. Pretty much, you want to have your insurance need met. People say, I have insurance at my job, but what they don't understand is that their job, you have to treat job insurance like it's a company car. So when you leave that company, the company car goes away, right?
Right.
So it's the same difference with, job insurance. When you leave that job, you have to get new insurance because that's a group policy that they have set up for the whole employees and stuff like that.
Right.
So my advice is always to have a private insurance, because if you wait until, 5, 10, 20 years after you left that company that you had that policy at, when you go to find private insurance, the price of that insurance can be way far more expensive because it goes off of age, the age you are at the time you buy it. So that's why we always recommend to have private insurance while you are, while you have your job insurance, because sometimes your job insurance don't even cover your full insurance need. And then, something were to happen to you, you're not fully covered. Your debts aren't covered, your medical bills aren't covered. So, but with an insurance policy, it does that. It helps you to protect your income, protect your family, all around.
This episode is brought to you by Nicholas Brown, REI.club.
Hello, and thanks for watching this brief video. My name is Nicholas Brown. I'm an author and a residential developer here in the Dallas-Fort Worth area, and we're on target this quarter of redeveloping 5 properties here in the Dallas-Fort Worth area. And our passive investors, they're just sitting back and relaxing it because they're enjoying receiving the double-digit returns, which is protected, secured, and insured. So if you're a passive investor, or if you have 401k or retirement income or decent credit scores in the 700 and above,
then download our chart for more information at nicholasbrownrei.club/partner, and I'll send you our DFW double-digit returns case study chart. Once again, for more information, go to nicholasbrownrei.club/partner.
Go ahead.
Ladies and gentlemen, I just wanted to make this because I used to be in the mortgage broker and loan officer, and I deal with financial planners and everything. This is just for informational purposes also. If you have any questions in time, this is a recording, you watch this on YouTube, make sure you guys reach out to a professional such as Antonio. This is for informational purposes only. So I'm just doing a disclaimer here. This is information. This is entertainment. So reason why I lead to that is the next question is there are different types of insurance, right? Life insurance, correct?
Right.
So what is the example? Because my situation is different than any other's person, right? It's not tied.
Right. So every individual family, every individual person is very different. You know, it varies because it goes off of if they're single, if they have kids, if it's just a spouse they have, it varies because the need changes. You know, the insurance need changes. So, but a term policy pretty much covers if you have debt, if you have mortgage, if you have anything that you have like to cover like debts pretty much. But like if you wanted to grow like for retirement purposes, like, you know, that I helped set up for a lot of kids and a lot of families and stuff like that. But if you want to do like an individual or index universal life policy where it grows, it has a accumulated value or a life insurance component to it as well. There's a ways to grow tax-free income in that, you know, in that vehicle. So
I heard that before. What's it called? I'm gonna write that down. It's called Index.
Index Universal Life.
Index Universal Life. Okay.
So, but all the policies that I have, pretty much it's not only for death, it's for while you're living as well. So if something chronic, critical, or terminal happens while you're living, you're covered. You know, you can get a portion of the death benefit. It's not only for death, you know, you can use it while you're living and stuff like that. And in the IUL, over time, you can become your own bank because you can borrow against the money tax-free. So
Index Universal Life, correct?
Yep. Yes, sir.
Okay. Ladies and gentlemen, one side note I forgot to mention, you're a broker, right? So you work around. Okay. Yes. He's a broker, ladies and gentlemen. So he works in different states, parts of the states also. I just want to plug that if you guys are listening and you're watching this. I forgot to mention that part to let them know. So you're more flexible.
Yes. So I broker for the top A+ rated companies in the nation, and I'm licensed in 7 states right now. About to be 8 because I have another client coming up. So I'm trying to bring value to everybody. You know, I could bring value to every state. I can get off 50 states if I want to, but I'm waiting to see. You know, when the clients come, I'll definitely get the license in that area to make sure.
What's your current states? So the listeners see here.
Right now, at this time, I have California, Washington, Idaho, Texas, New Jersey, Nebraska, Ohio. I think I'm missing one, but
you're about to get an 8. I had 7. That's 7. You're about to get
an 8. So the 8th is going to be Oklahoma.
Okay, great.
But I mean, I like I said, I can get licensed anywhere because it's not that hard to get. So.
Okay, that's awesome. So basically, you would tailor it to the person's needs. Am I correct?
Yes, I sit down with them. I do a dime. It's called a dime. So we go off their debt, income, mortgage, and education for the children. So, so for the debt, any debts they have, I calculate that in. The income, I times it by 10 because when a person passes away, like if a spouse passes away, if one spouse passes away, you want to make sure you cover at least 7 to 10 years.
Ladies and gentlemen, I'm going to hold up because I was going to ask that question, teach us something. So I advise you to put out your pen because I'm putting out my pen. He's teaching us because I told you we motivate, teach, and get a perspective. So this is a teaching part. So you're teaching us something. So it's called DIME, right? D-I, what does it stand for again?
DIME is debt, income, mortgage, and education pretty much for the children.
Mortgage and education. Okay. Education is pretty much for the children. Okay. And that ties in what type of insurance is great for you.
Well, the face
The
amount,
educate.
what their
Okay.
insurance need.
Coverage.
That's how I
Okay.
find that. That's how I find their insurance need. So the income is, we do it for the 7 to 10 years because we want to make sure that the other spouse doesn't have to rush to get 2 or 3 jobs to cover that income that was lost. Because essentially, what insurance is income replacement. It's not a bad thing, but it's kind of like taboo sometimes to talk about it. But it's something that needs to be in place for families because they have to know that the family has whoever passes away, because it's going to happen eventually, just to be real.
Right.
Something has to be in place to cover the other spouse, because you don't want the other spouse to have all this debt accumulated once the other spouse passes away. You want to make sure everything is covered, and
Cover
that's what
their
insurance.
standard of living, their normal standard of
Yes,
living. So when you
yes,
pass on, how many years do you suggest if my spouse passes away? What would so she's
well,
bringing in $200,000 a year? That's where their dime comes into place, or their 10
so
times.
yes, so she's making 200,000 a year. I pretty much times it by 10, right?
Yeah, so that's
So
2 million.
yeah,
This is just roughly. I'm just giving you this. I'm
yeah,
just
it's just
plugging their
roughly.
head.
So yeah, it's just roughly, and but it doesn't. When you do it, when I calculate everything, it's not. We make sure that it doesn't come out to. It's not that much money because the term policy is very inexpensive.
Sure.
I talk to people. Every day. It's like I post stuff on my Facebook and Instagram. And I say like, okay, you can spend $5 to $7 a day on Starbucks, but an insurance policy is only $2 to $3 a month. I mean, sorry, $2 to $3 a day.
Okay.
If you calculate it, it's way inexpensive.
Right.
Less than your Starbucks that you get every day.
Right.
So,
Right.
So when you look at it like that, it's you rather everybody you have insurance on your car and all this stuff, that your phone, you have insurance on your phone, but why not insure the person that's driving that car or using that phone?
This episode is brought to you by Nicholas Brown, REI.club.
Hello and thanks for watching this brief video. My name is Nicholas Brown. I'm an author and a residential developer here in the Dallas-Fort Worth area, and we're on target this quarter of redeveloping 5 properties here in the Dallas-Fort Worth area. And our passive investors, they're just sitting back and relaxing it because they're enjoying receiving the double-digit returns, which is protected, secured, and insured. So if you're a passive investor, or if you have 401k or retirement income or decent credit scores in the 700 and above,
then download our chart for more information at nicholasbrownrei.club/partner, and I'll send you our DFW double-digit returns case study chart. Once again, for more information, go to nicholasbrownrei.club/partner. Okay, so
That's the key point.
I kind of got off. I apologize on the teaching method, so it's called dime. so this is a good way where we can pretty much get ourselves prepared when someone reach out to you. We'll kind of be talking the same language a little bit. We'll be kind of educated where you can source us to a better route. Am I correct?
Yeah.
Okay, so it's called dime. So you're teaching this. So give us some tips. Give us a frequently asked question, or what someone should ask. What do you get? They like, man, I wish they knew this. I wish they understand. Teach me a moment. Give me something.
The biggest thing that I see, there's a big misconception on
Okay.
if it's life insurance is only for death. That's why I said that earlier, where it's not only for death, it's for living. You have living benefits attached to it as well.
Okay.
And there's some other things where they're worried about the price and stuff like that. They think it's too expensive, but it's not. It's very inexpensive for the amount of money that you can get covered for. It's very inexpensive, and creating wealth is like the best thing you can do for your kids. And a lot of people don't know that they can do this, like put a policy in, like an IUL, like we talked about earlier, put that in place to help their kids, to put them in a better position. Like a lot of families, they do a 529 for their kids, but it's only for education only. It doesn't have a death benefit attached to it. It doesn't have anything else attached to it like an IUL does.
So that's one of the methods you can teach, or you advise, or you can structure yourself. So you can
right.
Okay, say that again. So you can convert a regular
So no. So what I'm saying is that some people they'll have a 529 and they think that's the only thing that's out there for the kids to grow money and like
Educational, the
right.
normal,
But it's only
generic.
for
I would say
education.
generic, the generic
Yeah.
educational life policy, but they're not
Well, no,
aware of the.
but a 529 isn't a life insurance policy. That's what I'm
It's
saying.
not okay.
So a IUL is actually, in my opinion, is better than a 529 because it has a life insurance benefit to it, and the money that is accumulated in the IUL, you can do it. You can use it for whatever you want. But for 529, you have to use it for education only.
So
But
what
for
is a five? So a 529 is not an insurance policy.
no, it's educational only. It's like for education for them to go to school, and if they don't go to school, then they can't use it for anything else.
Is
But
money set aside for that?
yes, it's money set aside
Okay.
that the parents do. So, but IUL, you can say you want to use it for education, but you can use it for whatever you want. It's your money.
Right.
So
Okay.
you can borrow against it. 15 years from now, and be like, oh, I want to go start a business.
Okay.
The Mutual of Omaha that I work with, they'll be like, okay, cut you a check the next day.
And that's a term that the wealth, what they call family banking. Is that similar to that, or that's another?
It's
that's
different,
another type.
It's
Infinite,
different,
right.
infinite banking, like becoming your own bank and stuff like that. That's what it is, yeah.
Exactly. So is that tied with
because it's all tax free?
IUL? Well, you got
yes.
control. You control that, right?
Right.
Okay.
And so when you go to this when you have a policy like this it's a life insurance policy. When you go to a bank to ask for a loan, they ask you all these questions like, what are you using it for, whatever. But because it's in your life insurance policy, they don't ask you any questions. They just cut you the check because it's your money.
Right.
So
and ladies and gentlemen, on the real estate deal, which I kind of plugged him, asking to be a part of my surrounding, my listeners on there. This is good where you can be a hard money lender or a private lender where you can take out the money where people have the self-directed IRAs where, they're investing, they partner with other people, where you can do the same method with these IULs because that's your money and you charge yourself. But I'm getting a little bit more in depth. It depends on the people that's listening to this real estate investing tip that I'm showing you. So say, for example, Bank of America charged 6% interest rate, and I go to Bank of America, they deny me for an investment loan. I can go to you and pay you 6 to 8% a shorter term, but I tell you, hey, Antonio, I can't wait no 30 or 45 days. What you're telling me is it'll probably take no more than a week, less than a week for you to just get your money out, correct?
Well, yeah, but it's in the insurance policy. It's kind of it's over time. It's not like
well, I'm just saying accumulate. If you accumulate that amount, but if you want control to take it out instant or whatever, not wait 30 to 45 days. If that money's there, that 100,000 that you accumulated on your UIL that you want to become a bank, you don't have to talk to a banker. You're your own banker. You talk to your group, your family group that's in that y'all work together on if you have it structured. Am I right?
I right? Yeah. You just gotta pretty much say I want 20 grand. I want 20 grand to go invest in something, and they cut you the check. Yeah.
And it's structured that way. That's my point is. It's a little bit deep. That's what we talk about it in the real estate and investment club. So different ways to act as the bank and use these tools, UIL, once you accumulate that amount to be your own banker. That's what we talk about. That's what I love to have you come on and talk more about that. So we're going to end this. I'm going to ask, what's your perspective on when you say life insurance? And let's just say, since that's your passion, we got on that deep. We also talk about leadership, but we got more focus on life insurance and retirement. What's your perspective on that, Antonio? What's your perspective on our knowledge of that, especially you as a Black brother, me as a Black brother, or whatever? We're not as knowledgeable about that to evolve to another level like the wealthy. So I'm giving my perspective. I'm about to go deep in my perspective, but I want to get your perspective.
Well, my perspective before I actually got into the industry, it was kind of like I never really talked about it because I never really, I wasn't educated on it before. Just like a lot of people in our community, they don't have the education on it. So they just like, it's like taboo to talk. They don't talk about it, or it's like, they don't have the right person to talk to them about it or whatever. So what my perspective now is like, because I'm in the industry, I want to make sure I share all the information I can, because they don't teach this stuff to us in high school. They don't teach this stuff to us in college. Finance majors don't even learn this stuff that we learn in in the insurance industry. They don't really understand how money works. I mean, they say you think that finance majors know, but once they come into this industry, they're like, oh, whoa, like this is different.
Right.
It's really different. But it's like, it's all like just having an open mind. If you have an open mind and like just know that these companies are backed by billions of dollars, they have reinsurance as billions of dollars, so they're not here to scam you. It's because back in the day, like I read an article that talked about how there was some, back in the day, back in the 50s, 60s, 70s, there are a lot of people coming into our communities and giving us like only final expense insurance, not showing us how insurance can benefit us and help us grow to the next level. And my crusade is to help, bring that value to the inner city, because I think that once we gain the knowledge, we'll be fine. We'll have, once we become financially literate, or so how I do my thing, I educate first before I even do a deal. Like when I get on a call with somebody, I make sure I do education, how the money works, and talk about fixed income, variable index, and maybe talk about life insurance, and just to give them an understanding of how it works. Knowing not having your money just stuck in a savings and checking account is not going to work for you,
right?
Because you're only growing it at 0.03%. Depending on what bank you have. And it's not many. It's really higher than that. So with that being said, I can get you into something that's going to grow with 6.2% on average, and the cap of 10%. Imagine getting that every year, versus 0.03%. So it's kind of like, if you weigh the options, like, it sounds a little better over here.
Right.
When I first got into it, I was like, yeah, that makes more sense. I want to have all this money tied up in savings where it's not growing, and the banks, what the banks do, they use your money to reinvest in the same things that I help with.
Higher interest rates, leverage, OPM, other people's money. I know exactly.
So they use all your money to reinvest, and that's why they have all this money. So why can't you do it?
Exactly.
That's why can't we do it? Why can't we do the same thing the banks are doing with our own money?
Right.
Put it into something that's going to grow.
Right.
And set our kids up for generational wealth.
Well, Tony, I'm glad that's why we're building the bridge together. And that's why my purpose is to make this podcast, to give that information, to present this out there, to put it out in the universe, as I said, for people like you and me, where our grandkids or grandkids will learn from there and progress and build wealth together, man. So we can start. I want to start another series, man. I want to get you back on soon, because by the time I record this, we're about to come into 2022 January. Time goes so fast, man. But I want to get you on another series, man. I appreciate that. But tell them, how can they get in contact with you for more information, especially on that breakdown that you was talking about recently?
Yeah, you can. You gave my handle for, was it LinkedIn earlier, or
sure? You got any other ways you want to
reach
out to you?
So yeah, you can reach me on IG. I'm on IG at a.d._Robinson. Okay. Or you can just shoot me a text 707-694-4901. Just text me or give me a call, leave a message, because it's a lot of scam calls out there, so I kind of don't answer my phone a lot. So so if you leave a message or text me, I definitely get back to you. We can schedule an appointment, a 20-minute free consultation to see what your insurance need is, and I can help, and have other businesses as well. So yeah, let me know what you need, and we can go from there.
Another thing, one more plug. You do mortgage insurance protection, correct?
Yes.
For the investors. I'm just going like on the investors, anyone else is listening in on there. So he also, ladies and gentlemen, does mortgage insurance protection. So reach out to Mr. Antonio Robinson. Okay. I appreciate your time, sir, coming on for there.
Yeah.
All right.
Yeah. Thanks for having me.
All right. And ladies and gentlemen, that's it for this episode. And as I said before, when I end these, don't condemn, don't complain, because you have a choice to make a change. Have a great day.
Thanks for joining us on the Nicholas Brown Podcast. Make sure to visit our website, www.nickbrowninc.com, where you can subscribe to the show in iTunes, Stitcher, or via RSS, so you'll never miss a show. While you're at it, if you found value in this show, we'd appreciate a rating on iTunes. Or if you'd simply tell a friend about the show, that would help us out too. If you like this show and you are a new real estate investor, then check out one of Nicholas's free reports called the Wholesale Dominator Report, also located on our website, www.nickbrowninc.com/free reports. Be sure to tune in for our next episode. And remember, don't condemn, don't complain, because you have a choice to make a change. Have a great day.